Welcome to a CNBC Africa special. As always, my name is Arnold Kwizera, coming to you from Kigali, Rwanda. Now, in today's conversation, we are going to look at alternative financing options for African economies. Now, just to give you a little bit of context, with many economies on the continent having faced some form of recession as a result of the COVID-19 pandemic, some predict the road to recovery will need consolidated but creative economic models. Now, in this conversation, we want to look at alternative financing options for economies on the continent, with many young countries now trying to rebuild their economies after COVID-19. It is fundamental that they see this as a unique opportunity to lay the foundation for a green, resilient, and inclusive future. Now, for this conversation, we are joined by Hortense Mudenje. She is the Chief Operations Officer of Rwanda Finance Limited. We're also joined by Faisal Bana. He's the Director for Middle East Africa and India for Jersey Finance, and William Kabagambe. He's the Director in ASG Africa Practice. Now, if you want to be part of this conversation, tweet us at CNBC Africa, or you could tag me directly at The Real Kwizera. Let's dive into the conversation. Thank you for making the time, lady and gentlemen. And I will, ladies first. I want to start with you, Hortense. Looking at alternative sources of financing, why is this very important for the recovery of African economies?
Yes, afternoon, Arnold, and thank you for having me on this panel today. Pleased to be here and pleased to be with my fellow colleagues as well. So on the conversation really of alternative finance and why it's important, I think with the COVID-19 pandemic, it has become even more apparent that we have to think creatively, we have to think innovatively. And so this has really pushed us to see alternative ways of doing business. And in the finance sector, it has been even more so apparent. And so we're seeing a lot of trend towards more digital and fintech or tech-enabled actually finance solutions. There's also a need amongst investors, at least that we are attracting and that we are engaging with, to demonstrate sustainability. So basically to invest in a project that goes beyond just economic development, that has an impact on the society, that has an impact on the environment. And so these trends really are what are calling for a need to look at an alternative way of financing, an alternative way of boosting investment and development in the economy. And so really what I can say is that I think the COVID-19 pandemic has accelerated. So we're no longer looking at just traditional, for example, banking, commercial banking avenues of financing. We have, stretched the limits to see how else we can pull funding, how else we can fundraise to be able to sustain and build more resilient, I would say, financing mechanisms.
Thank you, Hortense. I want to bring William into the conversation. William, you deal with trying to bring FDI into the continent or onto the continent. And, different people, especially investors, are looking at different ways, but also African economies need to look at different ways of attracting that financing. Something similar to what I've asked Hortense. How do you bring, why is it important to look non-traditional at this particular moment?
Similarly to what Hortense mentioned, while the COVID pandemic has exacerbated a lot of the continent's longstanding issues, right, whether it's economic, social, and health, I think the rates of infections have not been as high as in other regions. However, the economic consequences of the COVID-19 pandemic have been severe, right? In particular, due to a combination of declining global demand and also local efforts to contain the disease. And so I think, all in all, to say, in what has already been a very vulnerable environment, Africans across the continent are facing serious challenges that require fast and effective interventions. And those must be carried out in creative and innovative ways, and also in affordable ways, right? And I think that's why looking at non-traditional ways of financing is vital going forward.
Thank you, William. Faisal, looking at all non-traditional ways of financing, and I just want to use Islamic financing bonds as an example there. If this is something, African economies, even what are seen as non-Muslim states, how can they tap into such a financing model?
Thank you very much, Arnold, and a pleasure to be in this conversation with such esteemed speakers. You've both the speakers before me touched on some very key issues and considerations that have come to the forefront of all kinds of discussions when it comes to financing, whether it's corporates, whether it's institutions, or whether it is private individuals and families. The need to be fast, the need to be creative, the need for the finance to be affordable. These are very key considerations now. You've touched on Sharia compliant financing as a form of an alternative financing, but I would go beyond that, and I'll say the ESG sector and ESG consideration brings in a whole bouquet of choices for people that need financing, whether it's institutions or corporates. Now, when you look at the Sharia compliant structuring, immediately what becomes clear is that it's not the label that makes a difference. It's actually what it is that is going to provide the end user. Now, the end user, and Oten's touched on this, is after impact. They're after the use of technology. They're after understanding what value will my transaction bring to the greater good in my community, in my region, in my continent. Now, when you look at Sharia compliance structuring in products and services, what I would say the convergence appears when you look at some of the key characteristics of that form of financing. I'll bring out three of those. One is around impact to the wider community, and again, you see that on the broader ESG agenda, and then you look at sustainability also. Again, this resonates with a form of wider conventional ESG financing as well. But then it's about sharing risk and reward. It's about real partnerships. It's about investing in SMEs in the same way that you would in larger corporates. Again, this resonates from a Sharia compliant structure and financing also. So I think this convergence between the objectives and characteristics of the wider ESG and Sharia compliant financing adds to this dialogue that we're having, and which we are talking about today around the wide range of financing options that are now available as a result of disruption caused through tech.
Thank you, Faisal. Hutsuns, you had Faisal just breaking down there and talking about Sharia financing. Just went through it in your court, right, regarding Granda Finance Limited, right? Something like Sharia financing, it's only not limited to countries that are practicing maybe Islam. Is that something that you would consider as Granda Finance Limited? And if you're to consider it, what kind of impact would you be looking for?
Mm-hmm. Well, thank you for that question, Arnold. And for sure, Islamic financing has seen a high trend, I would say, over the last years. And I know it's something that we definitely have to look out for. We haven't, as of yet, had a critical look at it. And we're not even currently offering at least products that are more specific to Islamic financing as yet. But it is in the works in the long run. I think right now, in terms of its importance, for sure, it's becoming more and more important because it is introducing different facets of financing and different, actually, I would say, considerations for financing that are just beyond just the financial gains to that. So I think what I can say is that it is part and parcel of our alternative ways of financing. We have started right now with a bigger picture in terms of alternative financing in the general term, more focused around sustainability, as well as tech-oriented, if I should say. And I know it will be part and parcel, and it will be something that we will be considering in the long term.
William, I want to bring you back into the conversation. We want to look at alternative financing, options for countries on the continent. What are some of those that they should look out for in the short run?
Yeah, no, thanks, Arnon. That's a great question. So I think I'll touch on two. I think the first thing I'll say is this: encouraging risk taking within the private sector. So ensuring that countries are able to place particular incentives for people to invest in, say, startup and SMEs that have growth potential. An example being in the UK in the 2008 financial crisis, they created this initiative, right, that allowed taxpayers to deduct what they invest in tech startups from their taxes. And that type of thing can help, enable this tech ecosystem to grow. On the continent in particular, I think Kenya and Nigeria are good examples that are heading in the right direction, but there's more that we can do. The second thing I think that's important to mention as well is to facilitate a rise in Africa-based venture capital, right? And I say this because, as you all know, there's a growing number of VC firms across the continent. I think a number of countries are enacting policies that help improve the business environment for startups and VCs. Senegal and Tunisia, for example, recently enacted VC-friendly legislation. I know Rwanda in particular with the creation of the Rwanda International Financial Center. And of course, Hortense can speak more to this in detail, but enabling that environment is key. And I think the last thing I add here is this: with the creation of VCs and promoting them, right? In particular, I think some African governments will see this as a good thing, specifically when it comes to self-sufficiency goals that some pension funds and national reserves are looking for, right? Which is to be able to set aside some of their funds and keep those investments locally, right? So investing in local VCs, which in turn will look to invest in, say, fintech, the tech industry at large, and then private sector. And so being able to develop those legal frameworks that will incentivize the allocation of public assets towards venture capital, which would then go towards investing in tech and other forms of tech, I think is key.
Two of those points, I want to bring them into the conversation, and I want to start with Faisal regarding one of those points. That's the 2008 financial crisis. What lessons could be drawn from that?
Thank you very much. I think where we were in 2008 in terms of advances in technology, in terms of just general awareness of the public and the structural issues that were there in the financial system are very different to where we are now with the structural issues created from this particular crisis and the restrictions that have been imposed across the globe on individuals and businesses as a result of the greater protection. So I think the situation is a bit different, but in terms of what we can extrapolate and what lessons can be learned, I think this time around it is very, very clear, and William touched on that the importance of the use of technology and the importance of access and the importance of the variety and available forms of finance is going to be critical, whether it's at the sovereign level or whether it's at the corporate level or whether it's at the private family level, individual level. I think it's important that that people explore all of the options available to them, not only from a product perspective, not only from a financial perspective, but also other considerations, jurisdictional considerations, considerations around sustainability, because these are all things we now understand to be as important as the financial element of it. So I think that is one of the key lessons that need to be learned from there. The others that we can talk about from a sovereign perspective is, and again, this was touched on earlier, the enabling environment. The enabling environment to attract FDI or indeed stakeholders in this sector, whether it's in Rwanda, whether it's in Kenya, whether it's in Nigeria, whether it's in South Africa. The governments there need to enable their legal infrastructure and regulatory infrastructure to attract investors to come in from outside, but also for the investors and institution in country to be able to do these kind of wonderful kind of products that are now available very freely. You know, you have wholly digital banks. The challenger banks are now, are now there. They don't actually have physical offices. They're doing business over the internet entirely. And then you have the established players that have a digital platform. They have their own digital roadmaps that are, fully digitizing, so that they can go out to a lot more. The Africa Free Continental Trade Area opens up its own opportunities. Arnold, you touched on that point around collaboration between Jezi Finance and Rwanda Finance. We have a very proud history of that collaboration, actually. We work with our colleagues in Rwanda, on very, very multiple facets, trying to help this conversation going. So I think this kind of collaboration would be my third point. Look at, we as a jurisdiction have been in existence for 60 years this year as an international finance center. And, we are there, we collaborate at the ground level in, for example, in Rwanda. We pass our expertise, our experience, our know-how to our colleagues in Rwanda, because, at the end of the day, it's all around, what is it that, we can do from an international perspective to provide value. But at the end of the day, actually, Arnold, it is in Rwanda, the experts in Rwanda or the experts in Kenya and other parts of Africa that need to be at the forefront of this availability for consumers at the end, whether they're corporate, institutional, or sovereign, or indeed private families.
Hortense, bring you back into the conversation. William talked about policy. Faisal has hinted on policy. Lately, we've been seeing Rwanda Finance Limited champion, some policies regarding financial laws in the country just to attract more investment into the country. Why is policy so important in the need to create alternative financing options?
Yes, thank you, Arnold. And I think both even mentioned great points towards, I like the point that Faisal mentioned in terms of when you talk about alternative financing, especially in these terms we're in, it's really all about responsible investing, but also partnership, sharing the risk and reward. And so in Rwanda, particularly, these forms are quite new to the jurisdiction and to the economy. And so with anything, it's always great and it's always more resilient and sustainable if it's done in a structured way. And it all starts with policy, because policy allows us, number one, not only to do it to meet international standards, but to ensure that we have the needed frameworks upon which investors will be able to leverage while investing in the country or even across the region. And so as we look to promote the Kigali International Financial Center, we have indeed amended and introduced a lot of the key policy reforms. Number one, that do with structuring. For example, I think you've seen a lot to do with partnership law being passed that will introduce more sort of partnership structures in fund industry. We have also passed a lot of incentives through the investment promotion and facilitation law that will incentivize more sort of alternative investments, either through pooled funding or through even new, I would say, instruments such as special purpose vehicles or even listing of projects in the capital markets. There are also reforms that are dealing a lot more to do with compliance and transparency, which is also something that I believe I could piggyback off of the question that Faisal answered regarding the 2008 crisis. There's a lot more sort of conditions to be able to be more transparent across jurisdictions, more transparent in investing, and more compliant with some of these regulations. So we are doing our part to ensure that we continue to be a compliant jurisdiction, more so even meeting the international financial standards.
Thank you very much, Hortense. I'm going to come back to you with a question regarding, how you combine transparency, compliance, and then IFC. But before we get into that question, William, bring you back into the conversation. Looking at African countries, many had taken up Euro bonds, some form of bonds. Sharia financing that Faisal has mentioned also has Islamic bonds, and we see a few countries, Nigeria being one of those that has been interested in that. Now, potentially, couldn't they or won't they risk falling into some form of debt trap?
Yeah, no, thanks, Arnold, and that is a great point. I think, look, after significant progress on the continent, right? Particularly against, the fight against poverty. I think it's important to mention this. COVID-19 has plunged nearly 30 million Africans into extreme poverty, right? So that's $1.9 a day as of last year. This year, there's another anticipated 39 million that could follow, right? According to the AFTB. And so I think it really boils down, and the key here is debt sustainability, but also how to ensure that countries are getting out of the debt burden, right? I think in recent weeks and in months, we've seen a couple interesting initiatives that have come about. The G20 in particular expanded the SSI, right, which is to help poor countries kind of cope with the pandemic. However, interest rates are still going to be charged, right? So in essence, it's just a delayed form of payment. The other thing that I think is also interesting to mention is, some African countries may also gain access to funds via the IMF, which is initiating this special drawing rights, right? So it's about 650 billion that will be used towards providing these funds to low and emerging economies. On the positive front, though, I'll mention this. I think this year we've seen somewhat of a jump in commodity prices. And I think in particular, governments and countries that are resource-rich countries will somewhat benefit. However, a lot of these countries that were burdened by huge budget deficits and high levels of debt, even before the pandemic, may not have the fiscal, I would say, firepower, right, to stimulate their economies, even through these remedies that are being, exposed. And so I think it's important to mention here that, no one country will ever, develop without incurring debt. But I think the real question here is how do you use that money, right, that is being borrowed? And that's something that we'll have to watch out in the near future.
Faisal, how high is our debt risk?
I think jurisdiction to jurisdiction, this would differ, and obviously some are debt to GDP ratios are more than 100%, and others are below that sort of bracket. I think in terms of the question, Arnold, is not in terms of what the debt burden or the debt rate is, but I think William touched on a very important point here. I think as we talk about alternative forms of financing, in the generic, in a general way, I think even for sovereigns, there are there's so much available. There are international institutions and international sovereign funds, non-African sovereign funds that are looking to invest in the continent. Saudi Arabia just recently announced $1 billion initiative to fund specifically for Africa. The UAE has been investing quite a bit here. You've got Asian countries that are coming and investing. They've got big stockpile of funds that are available for this. So it goes back to the point that Otens was making in terms of how do you make your jurisdiction attractive for this FDI. The fiscal management at a national level is the responsibility of the central bank and the ministries, the relevant ministries in those countries. They have the expertise and they have the experience, supported by international institutions to help manage that debt burden. But the point is, if a sovereign, like a corporate, like an institution, limits its access or limits its available sources of funding, then you're forced in one direction. And if you open your economy up, open your framework up, open it up to other forms and alternative forms of financing, immediately this makes you balance out, and you have a portfolio of debt in the public sector also that is that is spread across different forms of financing, and that supports fiscal management at the national level. So I think, because of this crisis, Arnold, governments have inevitably had to borrow. This is the reality across the globe. It's not an issue for Africa. This is every single country on the planet has had to do that. So everybody is going to have to go through this, this period of having to try and understand how it is that they're going to manage their debt levels. But what we're trying to encourage here is to say, actually, look at this in a wider lens. Look at what is available. You touched on sukuk. You touched, the Islamic bond, the equivalent to the conventional bond. That is in itself is a source, that government should be encouraged to look at. And then, there's other forms of bonds. The green bond has been, a success. It's been, there's been listings on the London Stock Exchange for that. In the continent itself, William touched on VC. And how do we get that form of finance come through on the private sector? This is what needs to be done collectively, and the ecosystem in each jurisdiction needs to focus on opening up more and making it attractive. But also as a continent, we need to do that, and we need to make sure the continent opens up so that it's it's not closed for business for whatever form of financing that comes through. As long as the regulation works, as long as there's transparency, and as long as there's accountability. Why not? Why should the African population and African businesses and African sovereigns not be open to that?
Thank you very much, Faisal. Unfortunately, we're running out of time, but Hortense, just before we end this conversation, surprising how 30 minutes ran by so quickly, that question on compliance, right? Can you have compliance, transparency, and still operate as an IFC?
Yes, Arnold. Actually, for you to be an IFC, you have to be compliant and transparent, at least in terms of what we are aspiring to as Kigali International Financial Center. And really, I think piggyback off of what Faisal mentioned, right now, where business is not as usual, we're dealing with a different type of investor. We're dealing with a global investor who is not only operating in one jurisdiction, but across several jurisdictions. And this calls out for the need for jurisdictions to be able to collaborate, for jurisdictions to be able to share information to not only ease operations and investments, but also to be able to ensure that things are done in a very, I would say, according to the rule of law, if that's what I could say. So for us as a Kigali International Financial Center, it is really critical for us, not only because it's part of the DNA of Rwanda, but also as an international financial center, we are on a global map. So we have to ensure that we're meeting the standards of either tax transparency or financial even standards. And so it is, you can't have one right now without the other. And I believe even with this COVID-19 pandemic, where we're seeing a lot of more tech-oriented investing and financing solutions, and now when you speak about alternative finance solutions, there are more, I would say, regulations that you have to deal with that not only speak to tax transparency, for example, but speak to that particular segment that you are attracting. So for example, I like the theme of this conversation being that it is speaking towards resilience, inclusivity. That is really about impact investing. That is really about sustainable investing. And we definitely have to be compliant with international standards to be successful in the long run. So it is critical for us. And we are definitely progressing.
Thank you, Hortense. Unfortunately, we have to bring this conversation to an end. And I want to thank our panelists, Hortense Mudenje, Chief Operations Officer at Rwanda Finance Limited, Faisal Bana, Director, Middle East, Africa and India at Jersey Finance, and William Kabagambe, Director in the ASG Africa practice. As always, you can tweet us at CNBC Africa to be part of this conversation, or you could tag me at The Real Quizzitor as well. Have a great rest of your day.